Let's talk about the GBPUSD. We've been looking at this for quite a while already here since April, and we said that if we would push above this high from April 28th, we would also push above the high from September 27th. So that would trigger this double top pattern with a target of 147.78. Now, we triggered that and we provided some updates on that. And what's kind of interesting now is that we have, as you can see here, we have two bounces from the breakout point. So the breakout point now is well respected. This would allow us, if we wanted, to reduce stops, effectively putting them slightly below here. Now, by doing that, immediately the risk reward ratio improves because the risk is now smaller. So then this becomes a risk reward ratio of 9.9. It's really important to remember that, because if we are predicting the direction of the market correctly, and we can usually lower the stop loss, not always, of course, but if we can usually lower it a bit, then the average loss on losing trades becomes smaller. Now, if we don't mess around too much with the take profit, then this works out in the long run. You'll see that directly in your trading statements, how your post risk reward ratio will improve versus your initial risk reward ratio. In other words, it's easier to become profitable really than it looks like from the beginning. Now, in regards to this, from a trading perspective, I know it hasn't really moved up too much to the upside. Welcome to the world of Forex. Sometimes it's like that. But what's interesting here is that the price has been trading sideways now for a couple of days. I would argue that it's been trading sideways for 20 days to be exact. And we are now dealing with a potential small ascending triangle. So if we would draw a line via these lows, then you can see that, we got 1, 2, 3, almost 4. Ideally, this goes down a little bit and then pushes to the upside. And here, because it's such a small pattern, I usually just measure the base, and then this suggests we can push towards 137.87. So if we would adjust the risk reward ratio here to these levels, then the risk reward ratio will be 3.88. And this is something we could do unless we wanted to keep the position for this big picture target. This could be good for someone that has patience and that doesn't mind holding positions for many months. Most people, they don't hold position for that long. So I think most people would do better getting out at an early stage. And many times where people make mistakes is that they hold for that big picture, while most of the time we just get these smaller moves, like going up to 142.58 requires quite a lot. I seen this firsthand where I was coaching a trader, and he would usually be up 100, 200 pip profit. And then many times the position would just come back and he would close out at a loss. And I told them, hey, even if you have a huge pattern like this one, break it up in chunks. And he started to do that. And he has had a terrific last 6 months in the markets. Now, I would argue that maybe mathematically it makes more sense to go for the big picture, less work, bigger profits. But again, you'll be in a situation where you maybe don't make profits for many months. And that on its own can actually cause you as a trader to deviate from your trading system. So instead of sticking with it, you start to give up. So keeping that in mind, grabbing some small profit many times, or smaller profits, is usually a healthy thing to do to keep you on track. What do you think? Leave your comments below.